Hello everyone, welcome back to Health Economics. So this is the second to the last lecture we have for this summer sections. In chapter 17, we are going to take a look at another healthcare models, which is the Bismarck models that provide the social health insurance to the economy. In this chapter, we would like to briefly describe the Bismarck healthcare system and then try to take a tour around the world to look at how countries adapt to this healthcare system. And later, we would like to actually take a look at some of the challenges the Bismarck model actually face and trying to find some solution to those problems. The Bismarck healthcare model is actually named after the Prussian politician. His name is Otto von Bismarck. He is the first chancellor of the modern unified Germany. The national policy was actually introduced in the year of 1881, and the policy actually includes the universal sickness insurance, which was designed to provide a universal insurance plans foundation to the citizens in Germany. The provisions of this healthcare reforms is to provide first the health insurance for some populations or workers in some industries. And over time, the governments adopt policy and in hopes of extending the coverage to workers in other industries. Dependence of the workers too, and eventually to the whole populations. I have two videos actually attached with these slides, which I would recommend students to check it out. After the introductions of Bismarck models of Germany, different nations around the world start adopting into a similar kind of healthcare system. Japan is the first one actually adopting a very similar kinds of healthcare system as comparing to the Bismarck models introduced in Germany. In 1985, the National Health Insurance Law was passed and guaranteeing health insurance to all Japanese citizens. Other East Asian nations like South Korea, Taiwan also follows the Japan's leads in the late 20th century. Many of the healthcare systems of the continent Europe, such as the countries like France, Switzerland, the Netherlands, they also start to provide the similar kinds of universal health insurance plan to the citizens in the country. Well, there are three main features in the Bismarck models. Countries adopting the Bismarck models, they might vary in different settings of the healthcare system, but they will usually share these three main common features. The first feature is the universal insurance. So basically, all the countries adopting the Bismarck model will actually provide a universal insurance coverage for the populations within the country. The universal insurance coverage, either through a plan sponsored by an employer or through the governments. The employer-sponsored health insurance scheme tend to be normally private, and they are heavily regulated by the governments in general. Under the universal insurance, basically no one is denied access to the insurance based on inability to pay or poor health status. So regardless what your health condition is, the insurance company must provide you at least one affordable insurance package. Another important feature under the Bismarck healthcare system is that The finance of the health insurance coverage is primarily through the payroll tax or other sort of taxes in a country, rather than charging the insurance premium based on the health risk of the insured person. This kind of rating is called a community rating. So people, they will have to pay the premium of the insurance package based on mainly the level of income they earn instead of the risk to getting sick. This sort of financing arrangement actually means the healthier people in the populations with low expected medical spending, they actually have to subsidize the care of the sicker people who have a higher expected medical spending. The community rating also is part of the managed competitions that we are going to discuss in the later sections. The last features under the Bismarck healthcare system is regulated private health. So under the Bismarck models, healthcare provider basically is privately owned. The physicians, they can operate privately. It's not necessary to be a public employee. However, the prices of the services are strictly regulated and usually are set by the government in the negotiation with the provider. The private provider basically have no options to offer the service at higher or even lower prices. So the sets of policies that comprise the Bismarck model actually reflect two major values. Number one, provide solidarity to the populations and also providing economic liberty. Well, comparing the Beveridge model, the Bismarck model, on the other hand, is trying to strike a balance between solidarities and also liberties in the country. Under the universal insurance policy, well, the poorest and the sickest member of the society, they are basically supported by the government, which grants subsidized health insurance to those least able to afford it. And this subsidy basically is coming from the tax revenue of the wealthiest and the healthiest in the society, which will be responsible for higher taxes and cover the expenses of the sickest member or the poorest member in the society. On the other hand, under the Bismarck models, the patients and the doctor basically it's given the freedom to choose or make decisions on their own. So patient has the freedom to choose what hospital they would like to visit and also which insurance contract they would like to take. At the same time, the physicians, they are not the member of the government's agents. So they can now actually have the freedoms to open a new clinics or maybe open a new hospitals anywhere that makes sense for them. So with this balance between solidarities, equities, and also liberties, the Bismarck model is actually having more freedoms for people to choose what they want to do and at the same time to provide a minimum standard care for the populations. Well, there are several countries that we have mentioned have already adopted the Bismarck model in the past centuries. And here we would like to take a very quick tour of all these countries at once. The health insurance in Germany is mainly divided into two broad classes. The statutory health insurance, XHI, and the private health insurance, the PHI. The previous videos that I posted in the previous slides actually explains the difference between the two. In general, the Germans patients basically have the option to choose amongst all available health insurance plans in the markets, either is SHI or the PHI. These plans are nominally private entities. They are extensively regulated. And we will talk about the regulations of managed competitions later in this chapter. The premiums for the insurance are basically collected as the payroll tax. And it only varies with income, but not the health status of the patients. Patients and insurers under the Bismarck model in Germany are basically free to choose their healthcare providers. And the healthcare provider can only compete with others based on the quality rather than the price. Also, the price schedule for doctors and hospitals are negotiated annually between the insurers and the providers. Sometimes the government might actually regulate the price by putting a price controls in certain types of healthcare services. Historically, the Swiss health system did not feature universal insurance. Not until 1996, insurance finally became universal, and the subsidies were established for the low-income people to afford the private insurance plans. Nowadays, the Swiss system actually closely resembled the Germany system. Insurers are heavily regulated and compete to attract customers who are required to purchase some forms of coverage. Switzerland is also notable for the pioneering managed care plans. Just like health maintenance organizations, the HMOs in the US. However, in the recent years, Switzerland also faced several health policy challenges. One of the biggest challenges is that the subsidies to the poor actually have problems to keep up with the rising insurance premium. And this mainly is caused by something that we call the risk selections. Well, we will have a sections talk about how to resolve the problem of risk selections and trying to explain what and how is it going to affect the healthcare markets in the Bismarck models. The Dutch health system actually follows a very similar path to that of the Swiss system. The Healthcare Price Act of 1982 actually gave the government very great control over the physicians' reimbursement rates in order to contain costs. It actually resembles the Germany's managed competitions models. However, one major distinction between the Germany and the Dutch healthcare system is that the insurance in the Netherlands it's mainly financed jointly by the payroll contributions and also additional premium. On the other hand, the Israel healthcare system actually features also the managed competition models, just like the one we saw in Germans, Swiss, and the Dutch system. The 1995 National Health Insurance Law actually established the current system, but with only 4 sickness funds. The law also defines a universal standard basket of service that every sickness fund must provide to the customers. Just like other Bismarck countries, well, the government in Israel also has the authority to set hospital and physicians' fee schedules for the entire countries. On the other hand, France is a little different as comparing to the other European Bismarck countries. Well, health insurance in France has been universal since the 1970s. A vast majority of the French population is actually covered by a large sickness fund for salaried workers. There are smaller funds cover other specific group of the French populations, such as different industry like farmers, agricultural workers. The French workers actually do not have a choice to choose between plans. However, all the plans that's available in the markets are more or less identical. The plans cannot charge additional premiums, and the benefits of the package are basically specified by the government. The patients in France actually has a very large degree of choices when it comes to selecting a doctors. The freedom is treasured by the patients who know they can always switch doctors and even go straight to a specialist or a hospital if they desired. Also, France is actually notable for its modest coverage of the ambulatory service. The cost sharings can rise to as high as 40%. Well, as a consequence, there is a robust private supplemental insurance sector that covers those co-payments for the services. Well, in France, the healthcare providers are paid directly by their patients under a fee-for-service system. Patients who pay the payments at the point of service, well, they will be later reimbursed by the health insurance fund for the portions of the expenses. The national reimbursement rate are basically negotiated nationally or annually between insurance funds and also doctor, nurses, unions. But all final negotiation must be approved by the government. Some of those reimbursement actually range between 60% to 80%, depends on what type of care and medical conditions being treated. Well, because the patients pay costs of care upfront, this actually ensures patients the freedoms to choose between different providers. And also, it allows physicians to freely prescribe and practice medicines in the market. Unlike other Bismarck health system, the Japan system is not centered around the managed competition market, where the patient can actually choose the insurer in the insurance market. Instead, the Japan system actually retains a strong emphasis on employer-based financing of the healthcare. It really depends on the individual work, what company a person works for, and that will determine which insurance society he or she will belong, and also the financial contribution that person has to make. There are basically 5 basic insurance types in Japan, which detailedly laid out in the textbooks. However, the main purpose or objective for having different pools or communities rated in the country is to provide this diversity of cost. Just like other Bismarck models, where there will be cross-subsidizations both within and across the pools. In the case of Japan, there is one group of one types of insurance. It's called Kenpo. So the Kenpo basically it's an insurance that bought by the large firm employees. So the large firm employee has to contribute certain amounts of their income to the public healthcare insurance package. Well, since the employees usually hired by the big firms or large firm in the society, they are usually the younger and healthier individuals. These contributions will ultimately help funding other public health insurance programs like the Kukuho, which is the insurance program for self-employed, retirees, and their dependents. Also, other groups like the ROKIN, which is the insurance coverage for the elderly in the society. Under such cross-subsidization scheme, the Campo employees actually pay extra in tax to help cover the cost of ROKIN and Kukuho members. Also, in Japan's system, patients are not assigned to doctors or hospitals, and they can actually visit whichever provider they wish. Hospitals in general are non-profits, but are owned by physicians and are effectively for-profit entity too. The actions of the healthcare provider are basically constrained by the strict price control negotiated by the Japanese government and also the Japanese medical associations. Well, in the next section, we are going to talk about some of the issues that we observe from the Bismarck models. In the previous chapter, we actually studied the beverage models, which adverse selection is not a problem at all, because the fact is all citizens are automatically enrolled in the free public insurance plan. And also at the same time, the public health service actually provides everyone equal access to the services. However, in the Bismarck models, it cannot avoid the adverse selections happens, or at least not completely. Even though the compulsory natures of the insurance enrollments, the universal insurance package, prevents the worst scenarios of adverse selections and helps gather the funding from the healthy people to subsidize the sick one. As long as the people can choose different insurance plans within the Bismarck system, some level of adverse selection can still appear. Today, the health insurance markets in most of the Bismarck countries, they all follows the managed competition models, which we are sampling the system that was introduced in 1993. Insurance under this model, it's not run by the government, but instead by multiple private or non-profit entities called the sickness funds. There are four major rules in the managed competition markets. First of all, under the managed competition models, every insurance contract is required to meet a minimum standard of care. And usually, a central government body will enumerate a list of procedures or treatments that all plans in the market are required to cover. Also, there are limits on co-payments and deductibles for those standard cares. The second rule is open enrollment. Insurers under the managed competition models are required not to reject any eligible customer, even the customers are unhealthy or with certain conditions of health. And number three, the compulsory participations ensure consumers are mandated to have and pay for insurance coverage at all times. With the compulsory participation, it actually helps limit the problem of adverse selection by pulling all the healthy body in the communities or the societies in order to subsidize those ones who are sick. And last, instead of using the risk rating to set premiums in the insurance markets, well, under the managed competition models, community rating is actually applied in order to calculate how much people will need to pay the premium for the insurance package. In general, The risk rating basically is when the insurer charging different premiums to different consumers based on their individual risk of needing the healthcare. So for example, it could be the case where the insurer will charge higher premiums to someone who are old and with a record of several heart attacks in the past year, as comparing to the premium that they would charge to a young teenagers who don't have any health conditions or genetic problem in the family. Because the risk to cover someone who are older and with a health conditions, well, the risk for paying off those health expenses will be much larger for the insurer as comparing to the young healthy body. In a free market, obviously, the insurance company would like to actually charge the premium based on the risk rating. However, under the managed competition models, insurers, it's basically evaluates the premium by what we call the community rating. The community rating actually entails charging everyone in this insurance pool the same premium. Since the insurance plans are financed primarily through the payroll tax rather than the premium on individual customers, this financial system, it's basically part of the community rating, and the tax only vary on the basis of income. So in general, basically the community rating system allowing the healthy body and higher income population to subsidize the sick ones and also the poor. So in general, this highly regulated insurance markets actually ensure everyone can access affordable health insurance coverage. And this is basically central to the philosophy of the Bismarck models. However, this kind of insurance models still will be very vulnerable to two potential problems. Primarily, there are two issues that the Bismarck nation has to face under the managed competition models. First, it's the adverse selection problem, and second is the risk selections. As we studied in the previous chapters, the adverse selections actually happens in the insurance market when the insurance customer, they are trying to take advantage of the asymmetrical informations in the insurance markets. On the other hand, the insurers also would do the reverse and trying to take advantage of the insurance customer. The risk selections occurred when the insurer only seeks for the low-risk, healthy, robust customer and trying to avoid the high-risk customer so that they can actually charge the premiums to the low risk without concerning about a high potential risk to pay off those very expensive healthcare expenditures. Well, not only the risk selections put the sick customers in a disadvantaged position in the insurance markets, but also it's considered to be a wasteful behavior of resources from the social perspective. The extent of the risk selections in practice can be very difficult to observe. Specifically, well, we don't know how the people who are not covered by certain insurance package, well, how is it going to affect their welfare? It's just not social welfare that we can directly observe in the markets. There are several tactics that's available to insurance funds to engage in the risk selection behavior. Those tactics include, number one, maybe they can actually advertise the insurance plan to only a specific groups of people in the populations. Or they can actually close offices in the high-cost regions, only running the office or their businesses that has a healthy body or robust customer. And number 3, to reward regions who find the sick customer and convince them to switch to other plans. Some of these tactics are controversial. While some insurer may actually take some illegal action in order to avoid those high-risk customers, such as ignoring call from the sick customer who wants to sign up for the insurance plans, or to provide deficient care to the sickly customers. Or sometimes they may actually hold the sign-up sections in buildings that are not accessible to the disabled, so that those disabled customers cannot sign up for the healthcare package. In general, the open enrollment is the key to making managed competition work. However, it also creates a very complicated relationship between sickness fund and the least healthy enrollee in the markets. Fortunately, risk selection can still be confronted. There are 2 main options to avoid risk selections or limits. One straightforward option is what we call the ex-post cost-based compensation scheme. Well, this involves establishing a national fund to reinsure the various sickness funds. Under this system, well, unlucky sickness fund will end up with the sicker customer, and the higher expenditures are basically reimbursed with the transfer from the lucky funds, and also who has the healthier customers and lower expenditures. The insurer can now actually confidently recruit customers in the markets. So no patients will be any more or less expensive to cover. And the funds know that they will be reimbursed for any customer who incur more expenditures than the average customer in the nations. Well, this solution actually completely solving the problem of risk selections, but also it provides less incentive for insurance funds to operate efficiently. It provides very, very minimum incentive for the insurers to economize on cares. Well, the second option is basically what we call the risk adjustment. The risk adjustment basically is a practice of compensating the sickness fund with the high-risk customers using payment from funds with the low-risk customer. So the compensation payments are based on the predicted costs, but not the actual health expenditures. So in this risk adjustment scheme, the transfers are based on ex-ante risk assessments and not actual cost outcome. So that the insurance funds that drew unhealthy customers are basically reimbursed based on how expensive their customers are expected to be, but not on how expensive they actually are. Under the risk adjustment scheme, it actually reduced the incentive for screening because the high-risk customers are no longer necessarily unprofitable. It also simultaneously maintains the incentive for efficiency care because the insurance fund actually keeps the difference if it managed to treat its patients under the expected expenditures. Also, the insurance fund can actually maintain or control the cost effectively for certain types of disease, and also routinely spending less than the national average on the patients or the enrollees. They can actually make money by enrolling the sick people. However, the risk adjustment scheme is also not perfect. If the central fund does not fully compensate the insurance fund for certain types of risks, well, then the risk selections will also occur in the insurance markets. However, as comparing to the ex-post cost-based compensations, well, the risk adjustments can be improved to be a more complete tool to remove risk selections behavior in the insurance markets. Even though the risk compensation scheme can possibly reduce the problem of risk selections, however, they do not solve the problem of adverse selections. In general, the adverse selections may still arise in the Bismarck models if the fraud's customers disproportionately enroll in certain funds that provide the most generous coverage. We have actually studied in Chapter 10 that the adverse selections could lead to a debt spiral in the insurance market, where the insurance company might actually fail by covering only the sick people and will also lead the insurance fund to a dead end. Moreover, the adverse selection can also become extremely destabilizing if firms are not allowed to adjust their premium. For example, if there is a group of new customers who are unobservably sick, and the fund could not receive a reimbursement through the risk adjustments, then those funds will have to file a bankruptcy for sure, because well, they have to actually cover those unobservable sick patients under the same premium they charge with other customers. So in the face of adverse selections and fixed premium, insurer simply has no incentive to provide a quality care for the sick patients. In general, there are two main ways to combat adverse selections in the Bismarck system in order to avoid those bad outcomes. The first option is simply to deny customers the right to choose their insurers in the first place. So by not giving the options for customers to choose what they want to get in the markets, will definitely avoid adverse selections. This is basically the policy in Japan, which the Japanese government actually avoid the managed competition system. Instead, a collection of closed funds to cover the populations in the nations. In Japan, every citizen is assigned to an insurance fund based on his or her employment status, age, and locations. Most of them are covered through the employer-based plans. However, generally, the coverage are still universal, because anyone who does not have access to the employer-based insurance or the retiree insurance, they are basically eligible to enroll in a safety net general insurance program. Well, option 2, it's basically to restrict the product differentiations in the insurance markets. The idea is, if the insurance fund cannot distinguish themselves significantly from their competitors, then there will be very, very little motivations for customer to engage the adverse selections behavior. So ultimately, there will be less inequality in the markets. But one of the examples, it's basically the statutory insurance fund in Germany. This is basically a standard minimum insurance package or coverage that provide to the populations in the nations. With this one standard of coverage for everyone, well, there is basically no incentive for people to choose where they want to get the insurance, because well, everywhere they go, they will always get this same standard of coverage. However, in the case of Germany, well, the rich people still have the options to get the private insurance in the market. Well, in this case, that means well, some level of adverse selection can still be possibly exist in the country. In the next sections, we would like to discuss about the price control policy for the healthcare markets under the Bismarck models. As we have seen in the previous chapters, the markets for hospitals and physician services can actually suffer from an imperfect competition market. High prices can be charged when there are little competitions exist in the market. In the reverse, when there is over competitions in the markets, it actually over enthusiastic adoptions of new medical technologies. We have studied in the previous chapters knowing that the over competitions or the lack of competitions in the healthcare service markets might actually lead to either inappropriate technology adoptions or the inefficiently high prices in the healthcare market. Price control basically are prices that negotiate between the providers and the purchasers. Well, in this case, the providers basically are the healthcare provider, including the hospitals, the physicians, and doctors. And the purchaser under the Bismarck model, basically the insurance funds. So essentially, the price control negotiations allow the purchasers of the healthcare to band together and exercise something that we call a monopsony power, so that they can actually fight for a lower prices in the healthcare markets. Given the health insurance coverage is universal in the Bismarck model, well, it is even more important to keep the healthcare prices low in order to avoid unaffordable high healthcare expenditures and also at the same time to limit the needs for taxes to publicly finance it. However, the prices set by the central agency can also distort the medical decisions making, which we are going to take a look at some of the strategies under such a price control policy. One of the possible policy employed by the Bismarck country to control healthcare expenditures is called negotiating fee schedules. Setting healthcare prices indeed is a very complicated process because the range of all the possible activity is so broad and it varies in a very different ways. Price schedule must adjust the related values of every single one activities or treatments in the healthcare market. For example, the value of seeing a patient for a routine checkup can be very different than the values performing a heart bypass surgery. Is the later ones actually worth more? How much more? Well, those are very difficult questions to answer. In the Bismarck healthcare system, in practice, well, prices are basically set periodically through the negotiation between the medical professional and payers. For example, in Germany, the two mandatory associations of doctors and nurses, they actually negotiate with the sickest fund that will pay them for the cares. In Japan, the Japanese Medical Association actually negotiates directly with the governments. Both the private and public providers in the country are bound by this price negotiation, and they must charge these prices no more and no less. Fee schedules can be used as a leverage by the policymakers to influence or alter the behavior of the healthcare providers. The fee schedule services is one of the primary mechanisms for the governments to regulate the supply of medical services, the use of the care, and also the level of aggregate healthcare expenditures in the country. For any kind of price control policy, it will be ideal results if the government can actually set a price that equals to the marginal cost of the productions for the product or service. This condition, when the price equals marginal cost, it's usually what we describe as allocative efficiency in the markets. However, setting the price equals to marginal cost, it's not an easy task. And sometimes for the governments to set different prices for different treatments or services in the healthcare markets becomes a very challenging job. In practice, the government agencies that are given the responsibility to set prices are basically constrained by several factors like limited information. They may not know exactly how much it takes to produce or to provide the services in the markets. Political pressures. When they set the price of the treatments too low, well, the providers or the service providers might actually have a fire back to the politicians or the governments. Or sometimes maybe it's just overriding needs to keep the healthcare budgets at the manageable levels. So in general, the process of governments setting the price equals to marginal cost can be very difficult. And in most cases, they fail to do this in the healthcare markets. When the administrative price is introduced into the markets that it's not equal to the marginal cost, sometimes it might actually create a distortions in the way that the doctors elect to treat the patients. In some cases, doctors or hospital might be actually provided with this financial incentive to prescribe a care that is not clinically optimal for the patients if the price of the treatments or for some treatment option is actually setting above the marginal cost. This kind of problem actually occurs whenever there are two or more clinically defensive treatments that might be used in the same situations. If the governments set prices that incorrectly for even one of those treatments, the clinical distortions could arise. Despite all these theoretical problems, every Bismarck healthcare system actually sets some prices centrally, mainly as a way to limit public expenditures on healthcare. There are two examples covered by the books to illustrate the problem of setting the prices too high and also when the price is set too low. In the first example, we would like to take a look at the case where the prices are setting too high in the pharmaceutical industries. In Japan, the official prices for most pharmaceuticals are deliberately setting higher than the actual purchasing price charged by the drug company. This actually provides a fixed profit margins for the hospitals and clinics, which are permitted to sell the pharmaceuticals they prescribe directly to the patients. The gap between the purchase and sales price for the drug is known as the doctor margins. From the study by Rothwins and Okamoto in 2000s, it actually finds that the Japanese physicians often opt to sell the higher priced drugs to the point where the Japanese pharmaceutical expenditures actually constitute nearly 30% of the all healthcare expenditures in the year of 1993, which by contrast, this figure was only 11% that same year in the United States. In this specific examples, the perspective of the easy profit actually distorts the prescribing practice of the Japanese doctors. In the second example here, we would like to illustrate how prices are setting too low can be just as harmful as the prices setting too high. This is basically a story of a cocktail implementation. A cocktail implementation basically is a technology introduced in the mid-1990s that helped restoring hearing to the deaf. It provides a good case of study how low reimbursement rate can actually slow down the adoptions of the useful technologies. When the technology was first developed, well, both the US Medicare and Medicaid system actually priced the reimbursement for the surgical procedures at a very, very low level. So any doctor who would like to perform this cochlear implementation for the patients, they have to buy these very expensive implants and also perform a very difficult surgery. However, since the Medicare and Medicaid system only reimburse a very, very low rate as comparing to the cost of the device and also the procedures, there were only a very limited number of the deaf people had the implants in place in the US. By contrast, in the Japan's, the cochlear implementation was reimbursed at a very, very high level. So the technology can be widespread and rapidly performed it in Japan as comparing to the United States. In this example, this is basically a distortion. When the price is setting too low in the market, it actually slows down the adoptions of these new useful technologies in the healthcare system. In addition to the price schedules, countries with Bismarck health system also introduced other mechanisms to control the public burdens of healthcare costs, which include gatekeeping. The help prevents access to the specialist unless it's needed, and a foremost health technology assessment. This policy already comments in the beverage models that we studied in the previous chapter, where the governments provide the healthcare services directly to the public. However, this is relatively recent addition to the Bismarck models. Traditionally, the Bismarck countries actually have permitted the patients to seek care from whichever the provider they want. However, there is a series of reforms that actually came in later. For example, France and Germany have imposed a gatekeeping reform, just like the one we see in the UK. The gatekeeper basically are physicians who manage the referrals of patients to specialists and other hospital services. However, the ones that the France and Germany imposed, the system actually is voluntarily for patients. So patient who wants to see specialists on their own, they can still avoid the gatekeepers and go straight to the specialist. And they will only have to pay a very small fees in order to get to the specialist in this case. Since it's not mandatory, well, this reform are in general known as the soft gatekeeping. Another approach recently imported from the beverage models is the centralized control of HTA. So in the recent years, there are many Bismarck countries actually moved to incorporate the formal health technology assessments into their healthcare system in order to limit the use of the wasteful technologies. Taking the case in Germany, in 2004, they actually established institutions for quality and efficiency in healthcare in order to advise the Federal Joint Committee on the effectiveness of new medical technologies. However, it's not every country that they will adopt into this health technology assessment. Taking the case in Japan, there is actually no formal health technology agents performed by the government at all. And similarly, the Switzerland has no publicly financed health technology agency. Despite the lack of the formal HTA agency in this country, a study of the cost effectiveness of new technology conducted somewhere else are important inputs in both price negotiations and also technology adoption decisions by the insurance society. Well, in conclusions, how do beverage models compare the Bismarck models in general? Again, the beverage system that we studied in the previous chapter emphasized on equity and equal access of care. On the other hand, the Bismarck system actually emphasized on patient choices and providers' competitions. Countries that have adopted into Bismarck healthcare system, they tend to have a higher national healthcare expenditures as comparing to the beverage country. But the trade-off cannot be avoided, just like how we described in chapter 15. There are always three Chalamay's goals that we would like to achieve. When we are trying to improve wealth in a country, somehow we have to give up the other two, which is health and equity. When we're trying to adopt or maybe achieve more on one of the other Chalamayr, let's say health, then we have to give up some level of wealth or equity. So it's always a trade-off that the country has to face, and there's only very little surprise to learn that the beverage countries are also slightly less healthier as comparing to the Bismarck country, at least by some common measures. But we must remember that countries perfectly embody either models in its policy. Every country has adopted some elements of both. The recent reforms in beverage country has focused on increasing the choice for patients and competition between providers. Meanwhile, the recent reforms of the Bismarck countries have introduced gatekeeping and managed care tactics that restrict patient choice in certain ways. So in short, the beverage system and the Bismarck models seems to converge to each other. There might be some day that we can hardly to define or distinguish one to the other. In the next chapter, we are going to discuss about the American models, which completely different from the Bismarck and the beverage models that we study in these two chapters. I will see you next time.